this video, we will deep dive in some new trades we are doing right now. So we will see why we are buying these shares, and we will do a complete analysis in order for you to understand which is our approach on the stock market. We are doing really well with this new kind of approach, which is a mix between fundamental analysis and the statistical, mathematical, and technical analysis. It's something really new on the market because until today, using technical analysis and fundamental analysis together was something really difficult to do. But today, thanks to softwares like Forecaster, we are able to mix properly these two different vision of the market, and we can get the best from both sides. So let's deep dive. Let me share my screen so you can watch everything I do on the chart. As I told you, what we do is searching on the market for good investment opportunities on the stock market. And once we find good stocks, good company where we could invest in for the long run, we do a technical analysis, we do a statistical analysis in order to understand if it's the right moment to go long, it's the right moment to buy the stock. Okay, so first of all, we have to search for this kind of opportunity, and the best way to do is using the forecaster terminal, going here to the ranking page where we can find all the indexes all across the globe. For example, if we go to the S&P 500, which is the most important index all around the globe, first of all, we can see something really interesting. In real time, we can see if the all index is over or undervalued. And in this case, even if the S&P 500 ran a lot in the previous month, we can definitely say that at the moment is a little bit undervalued. How can we tell you this? Very simple. For all the components of the index, as you can see, we have the fundamental page on our software where we can and we calculate the fair value for the company using three different methods. We have the discounted cash flow, the Peter Lynch method, and the economic value added. We do a mix of these three methods. We do an average, and we can find here the fair value. We know for sure all the 505 component of the S&P 500. We know exactly which is the fair value for every single shares, and this is why we can tell you if the index is over or undervalued. Of course, we find a very different situation if we calculate the fair value only using the top 10 positions. Of course, we can find an overvalued situation because, as you probably know, the top 10 stocks of the S&P ran a lot, a very lot in the last month. And we can also find, and we can also calculate the over or under valuation on a single sector. In this case, we can see healthcare, for example, is a little bit overvalued. If we would like to search for the best investment opportunity on the whole index, and as I told you before, you can do this not only on the S&P 500, but you can do on all the indexes we have all around the globe. If you click on the best to worst button, very simple, you can find the best opportunity on the market. And here you find the list, which is a list where you can find the best opportunities starting from the very best to the worst. And as you can see, for example, you can find Ulta Beauty, which is a company we never heard about in the last month, but once it jumped, it popped in this list, we were very happy because this happened some weeks before Warren Buffett bought it. So, of course, we cannot say Warren Buffett is using the Forecaster terminal. I cannot tell you. I'm joking, of course, but we are very happy because it means that for sure this company is undervalued. And if you click on this button, you can find the specific page for UWT. You can find the fundamentals, and you can deep dive in the analysis where you can find all the fair values with the under or over valuation. Of course, in this case, we can find a very undervalued company. You can find all the financials, the ratios, and everything you need in order to analyze the company. But let's go back to the S&P 500. Let's go back to our list, because the first stock I would like you to see is Molina Healthcare. I was looking before the healthcare section, the healthcare sector, and as you can see, is a very interesting sector because it's still undervalued. And if we click best to worst only for the healthcare sector, we can find that Molina Healthcare is in the second position. So it's a very interesting company in this specific sector. If we switch to all stocks and we do the best to worst, we can find that Molina Healthcare is in the row 18. And this means it's a very interesting company. Okay, so we can open the specific page for Molina, and let's start for the first piece, let's say, of our analysis, because as I told you, we start searching for good investment opportunity using the fundamental analysis, and only if the company is interesting for a long run investment, we then switch to the technical part in order to understand if it's time to jump on the share, on the stock. Okay. Good morning, everyone. Good morning, Karen. Good morning, everyone. So, Molina Healthcare, as you can see through the description, is providing and management healthcare service to low-income families. Okay, so it's a very interesting business because it's a business that take care of older people, and the aging population is a mega trend that will not stop in the future, and this is why I'm interested in this kind of business, because we are definitely in a business that will grow by numbers in the future, because we will have more and more old people in the future. Okay, if we go on the analysis, we can find which is a quite important company with 18 billion of market cap, very interesting. And if we go and see the numbers, we can see that the sales are growing, also the net income are growing. For the first time in history, they closed the 2023 balance sheet with a net income of more than 1 billion, which is quite interesting. If we go and see the ratios, we can find a very interesting situation with a very high ROI, 25% of return on the equity, shareholder equity, and very under control debt, because as you can see, we can find 0.67 57 of debt equity. It means this company has more cash than debt, and this is something good because it means they are not using the leverage. Okay, very interesting. Very interesting, we can also see that with all the method we use in order to calculate the fair value, we can find a company which is undervaluated, okay? Because at the moment, the last close was $324 per share, and both the discounted cash flow, Peter Lynch, and the economic value added give us a fair value which is above $400. Very, very interesting. Even if we switch off the discounted cash flow, which is um, the method that give us the highest number, and we only stay with Peter Lynch and the economic value added, we can still find a 31% undervalued situation for this company, which is very, very nice. It's very, it's a very solid result for our analysis, okay? So we can deep dive, we can go further in the analysis, and we can see the solidity section where we can find a very solid Altman Z-score, which tell us that the company has a very low risk of bankruptcy. Very important when we would like to decide if a company has a strong potential in the long run. And very important, we can definitely say that the company is not rigging its financial results, because we have a Benisham score which is in the safe area. If you would like to um, deep dive better in this kind of ratio, you can find all the descriptions and also the formula for this ratio. And for example, this ratio has a very nice history, because students from the Cornell University applied the Banish model, and they unveiled the dark truth behind Enron Corporation. Maybe you don't remember, but Enron Corporation was one of the biggest fraud of the economic United States history, okay? And they did something really bad. They rigged the financial results, and the history is very famous. And thanks to this ratio, these students found that the company was doing something bad. Anyway, let's go further in the analysis. We can go to the value generation, where we can see that the company we are talking about is robust. Very interesting, because they are buying back their shares and they are rewarding their investors. Very interesting. If we go and we can see in the last years, we had a positive shareholder yield. It means this company is creating value for the shareholders, and year by year, they are improving their company. Look, because our weighted financials, how we call them, are improving year by year. So we are in front of a company which is managed very well. Okay. So perfect. We are in front of a company which is definitely a very interesting investment for the long run. So now we have to go to the overbought and oversold section in order to understand if it's time to buy the company. And I'm sorry, guys, but we did this webinar in Italian a few days ago, and we gave the exact entry point exactly on this low. We gave the entry point exactly on this low. It was in July, but now I can tell you, and I would like you to understand why we got inside this position exactly on this minimum. But the company, don't worry, is still interesting, and we can buy it for more upside potential. But look, as you can see, we have a chart here, and on this low, which is in June, you can find that the chart started to be green. And in this exact low, we had a spike in volume. Then look what happened. The price is starting to fall again, but in the same period, our indicator, which is the Wyckoff indicator, started to rise. This indicator is very interesting, guys, because it tells us if the buyers are exceeding the sellers on a given stock. So in this case, as you can see from the chart, you can see that even if the prices of the share was dropping, okay, the trend was a bearish trend, the number of buyers started to increase. So we can find on the chart what we can call a divergency between the prices and the indicator, okay? So very interesting, we can find on every low starting from this point, we have a spike in volume, and we also had a spike in volume in this case, and also we have the prices started to they colored in green, okay. This is another indicator we have, which is the advanced DPO. You can find the description in our software, okay. But very easily we can understand in this particular case that statistically speaking, these prices were low. So we have a company which is fundamentally speaking very interesting for a long run investment. And at the same time, we have a company which is very interesting also statistically and mathematical speaking. Okay. So in this case, we knew, thanks to this divergency with the indicator, that this law was a massive law. This was a very important law. And this is why in the Italian webinar, we said you can just place a buy order here on the law. And what happened is history, guys, because the prices went down, broke just a little bit this low, and then the prices started to rise again. And I'm sure this company will rise in the future because it's a very interesting company with a high upside potential, and as you can see, a very interesting statistical situation. Okay, very, very interesting. If you would like to watch also a mathematical perspective, let's say, look what happened here. In all this period, we had also a divergence between prices and the oscillator, also on our speed indicator. Speed is something very easy. We calculate the velocity, the speed of the prices as it as you can calculate the speed of a car. Okay, imagine this is not a price of a share, but it's a car. We can calculate the speed of these prices, and for example in this case we started to have a divergency. It means that even if the trend is downward, we can definitely say that the speed of this movement is decreasing, okay? Because we have a divergency between prices and the indicator. Very simple. So this kind of approach is very strong and it's very solid because, as you can see, we start from the fundamental analysis. If the company is solid, if the company is undervalued, if the company is in a great business for the future, we switch to the technical side and we analyze the company from a technical perspective, an analytical perspective, a statistical perspective. And in this case, we can definitely say we are on a very important law. Okay, this is the first share. I would like you to I would like you to take a look because it's very, very interesting. And remember, we did the same kind of analysis in our last video, which I can send you now by chat if you are watching me real time, but you can find the link in the description of the video if you are watching a recorded version. Okay, you can find this kind of analysis where, for example, we analyzed the ASML shares and we told you we are going to buy the company because it's very interesting and we really think we are on a very important low. As you can find that video, but just a quick recap, SMML, it's a very interesting company, undervalued, very solid, blah, blah, blah. Perfect. If we watch the overbought and oversold situation, we can find exactly this kind of situation. Look, a very important low, which was colored by green, another very important low, which is colored by green, spike in volume here, spike in volume here. Look at our indicator, the Wyckoff, starting from August, the share dropped and dropped and dropped again, but at the same time, the number of buyers are increasing against sellers. Okay, so we had a downward movement, but with number of buyers which are increasing. And this is why we decided to get inside this company. We bought this company because look, huge spike in volume, new low, so one low, two low, one second low, and under this low, it's a massive buy point because we really think that the company now can start to grow because it's very interesting, fundamentally speaking, and very, very interesting statistically speaking. Look, we can also find a very nice divergence in the speed indicator. As I told you before, we calculate the speed of the price. And for example, in this case, we can see the price is falling down, but the speed of prices is decreasing while the stock is going down. And so we have all the signs that this very interesting, fundamentally speaking, share is doing a bottom, a very important bottom. Okay. I would like to show you something else, guys, because if we go, for example, on the S&P 500 and we go to all stocks and we do the best to worst button, we click in the first line, we can find Adobe. Adobe, it's a very interesting company, fundamentally speaking, because as you can see, we have, as for Molina, a very solid fundamental analysis because for every method we use, we can find undervalued company. If we do the average, we can find a 32% below the fair value company. Very interesting. As you can see, sales and net income are growing. Ratios are very nice. We have a 35% profit margin, 32% ROI, debt equity completely under control. Very nice company. Very solid. They doesn't trigger the financial results. And look, they are aggressively doing buybacks. Look, so this is why the company is robust. Okay, they are rewarding their investor also with a very strong buyback policy. But it's not time. It's not time to buy the company because look, if we go to the overbought and oversold, we can definitely say that the very important law where we can decide to buy are those one. Look, and so why I tell you this? Because look, we can find the chart was colored in green, which means that statistically speaking, we are on a low, on a very low point. Then, starting from April, we had our indicator started to tell us that the numbers of buyers were increasing, the number of sellers. Okay, so now what? Now, very easy, we have to wait when the prices will come back here at this level. Okay, because at the moment we cannot find strong divergence between prices and the indicator. So it's very, we have high probability that the prices can continue to drop and reach the previous low, where we can definitely find a massive buy point. Okay, so for example, we are in front of a very interesting company if you would like to invest for the long run, but thanks to this new approach, we can wait, and we can wait for the perfect timing moment to get inside the market. Okay, so in this case, of course, we can wait for the prices to drop at 10% more and reach the previous low, where we know, thanks to the charts, thanks to our indicator, thanks to the spike in volume, that these are a very interesting low. So this level could be a very interesting point of entry for this company. Okay, so we have to be patient, because with this approach we can mix fundamentally and technical approach, and we get really nice results. Okay, the last share I would like to talk about is an Italian company. Probably you never heard about it. You can also find it listed as an ADR in the United States stock market, but we can definitely analyze the company, the Italian one, which the one I invested in. STM Microelectronics is a company involved in the design, develop, manufacture, and sell semiconductor product. So we are in a very interesting sector, thanks also to the artificial intelligence boom. And as you can see from the numbers, we have a very interesting company, because if, for example, we use only the Peter Lynch and the economic value added method, we can find a company which is very undervalued, very interesting. We can find a company which has a low risk of bankruptcy. We have a company which is not rigging they are not manipulating their earnings. Okay, they are growing a little bit in efficiency, even if they doesn't have a very strong buyback policy. Okay, but if we go to the oversold and overbought section, look at this company. We have the perfect situation, technically speaking. So we have a very interesting company, fundamentally speaking. And if we watch at the overbought and oversold situation, we can find a very interesting situation, because look, we have a company which dropped, the chart became green, which it means statistically speaking, we are in a very low point. Okay, spike in volume all during this drop, which is a sign that investors are buying. Another lower low with spike in volume, and look what happened to the prices between the indicator. the number of buyers started to rise, even if the prices of the share stayed at the low. Again, the share price did it again with a spike in volume and our indicator, the Wyckoff, which is continuing to grow. It means the number of buyers are massive against the sellers, okay? And so this is why we bought the company in the last days, and we are long at the moment because look, we are in a very interesting situation, and I really think this could be a very important low from where the company can start for a long-term trend, uptrend. Okay? Perfect, guys. I'm very happy today. We saw something very interesting, some examples of this new kind of approach. It's giving us a lot of opportunities because, for example, also probably you remember the shares of Lululemon, which is a very interesting company, fundamentally speaking. And we found the same situation we are watching on this company we talked about today, Molina and STM. And look, we are doing great because we have a company that in the last month rose from $2,033. It's exactly where we got in to more than 300. Okay, so this approach is doing great, and I'm really happy to share my ideas with you every week. Thanks for using the Forecaster terminal. If you have time, I really would like to ask you a favor. If you go on Google and you write forecaster.biz, please go to Google reviews and write us a 5-star review. It's very important for us. It helps us a lot to go abroad and go globally with our software. I can only say thank you, and I can only promise to you we are continuing to develop our software, and you will have a lot of new features before Christmas. Okay, perfect, guys. See you next week for the next webinar. Hope you enjoyed. Thank you very much. If you decide to to write a review on Google, and that's it. We will keep you updated regarding all our position. Thank you very much. Bye bye.